hypnotized by the sounds I'm breathing in. Hold tight, hold tight.
What's going on, guys? Nick Foy here from under30wealth.com, and today we're going to be getting into real estate investing business plans. So this is one of the first steps that you need to take before taking action. Your business plan is basically going to be that roadmap that guides you. We're going to cover several different topics and bullet points below to help you start building an outline. So you're going to be able to write down your answers for each of the different sections to get your outline going. And then if you want to go over to like a Word document or Google Docs and actually make a formal business plan, you could do that. But having an outline is probably the bare minimum that you're going to need. And that's going to serve as that roadmap that's going to be able to guide you through your real estate investing business. So here we are over on the blog. I wrote a detailed blog post that you can find. I'll also link to it in this video below in the description. So first, what should your business plan include? Step number one, you need a mission statement. So this is basically that statement that's going to tell people what your business purpose is and the benefits your business will provide. So spend some time researching company mission statements on Google, and you'll see on their websites, what a mission statement looks like. And then you can consider it your why. So this is like the big purpose behind why you're investing in real estate, what your ultimate mission is. Then you've got different goals that you want to achieve. So this is the next section that you should put in your business plan. So you need to have monthly and annual goals, as long as short-term, mid-term, and long-term goals. So the first 3 months, the first 6 months, the first year, then go into 3 years, 5 years, 10 years, and 20 years down the road. So you've got different goals that you're aiming for. So for example, when I first got started, one of my first basic goals was just buying my first property. And I had that as a short-term goal that I wanted to do it, in a year or less. And then from there, I had other goals of, buying property number 2, number 3 within the next couple years. And then by year 10, I want to own 50 to 100 different units as rental properties so that I'm collecting lots of passive income. And then you can get more specific with your goals even. You could break it down into, like I said, monthly or weekly steps that you're trying to get accomplished. That way you give yourself deadlines. So that's the next step, having time frames. So you got to set a time frame for each of your goals, because this is going to be that deadline that pushes you and makes you take action so that you stay on pace and you stay working hard to reach that goal. So for example, is like in school, teachers would set deadlines when homework was due. A lot of kids would procrastinate until that night before that the deadline was due to get it done. And then there's some kids who wouldn't do it at all. They would just skip it. And, those obviously are going to be the ones, if you have those habits in real estate investing, you're not going to be as successful. So ideally, set deadlines, set time frames, try to stick to it, and that's going to help push you along. So an example, recently with our apartment building, we set the carpet guys to come in after about 6 weeks of owning the building. So that gave us 6 weeks to hurry up, get in there, bust our butts, getting the place ready and renovated so that we could have all the painting done, all the drywall work, all the sanding, all the messy stuff done, so that when those guys get in there, they could put down the fresh new carpet and we don't have to worry about getting stains and messing up the nice new carpet. So it gave us a good time frame and deadline to push us into gear to get a lot of work done quickly so that we'd be ready for those carpet guys to come in. You also have the market section. So this is where you're going to do a bunch of analysis on your local real estate market that you're going to be investing in, and then break it down even specifically into neighborhoods. So you want to drive around first, get a feel for the different neighborhoods in your area, figure out which areas look higher end, which ones look kind of poorer that maybe you don't want to, invest in necessarily because of the crime rates or not feeling safe living in those areas, and so your tenants probably aren't going to feel safe living in those areas. So ideally, you want to pick out the neighborhoods that you think are going to be higher end, better for investing, that's going to appreciate over the long term in value. You could charge higher rents. You're not going to have to worry so much about crime. So pick out those better neighborhoods that, it's going to be your personal opinion, what you feel comfortable with. There's no, right or wrong between areas. Some people feel some areas are good and others think those areas are bad. It's everybody's personal opinion, but drive around, pick out those neighborhoods, then start doing research. So I talked about this in another video, how to use Zillow to research. So then what you do is you could find recently sold homes in those neighborhoods. You could find rental properties in those neighborhoods using online tools like Zillow, Trulia, Realtor.com, Homes.com, or talking to a real estate agent. You could find out what homes are renting for in those areas, and that's going to help you determine how much rent you're going to be able to charge. And then from there, you could start figuring out, what all the expenses of different properties would be to try to figure out and work your way backwards to figuring that purchase price that's going to make the most sense based on the rental income you can charge. Because if the price is going to be way too high and the rental income's not catching up, you're not getting enough rental income to justify such high purchase prices, and you're not going to have that much cash flow, then it might not make sense to buy rental properties right now in those neighborhoods. You might start looking at those neighborhoods instead as flip opportunities. So really understanding your market, this is going to be one of the biggest steps in your business plan. That way you've got a game plan of where you're going to spend your time researching deals. Then you've got the strategy section. So there's lots of different ways you can make money in real estate. And it's best to start out just selecting one strategy, working hard, mastering that strategy before eventually moving into other strategies. So when I first got started, I tried wholesaling, and that ended up being a failure. So from there, I moved into rental properties, and then from there, I moved into, flipping / rental properties. So I realized that wholesaling wasn't necessarily for me. I was more comfortable trying to go after rental properties to build that passive income that could support me and allow me to eventually quit my job someday. So that was the strategy I went after, and I spent all my time studying rents, studying all the expenses a landlord faces, how evictions work, and pretty much all this knowledge I was able to turn into an ebook that I shared with others for a while. It's on Amazon. It's a landlord book, How to Become a Successful Landlord. And so that's, by teaching others and by learning all that stuff, I was able to then start buying my own rental properties and building a portfolio that's got multiple units in it now. So that's the strategy I went after, but obviously you've got wholesaling, you've got, rental properties, you've got fix and flips, and then there's some more diverse strategies called like the live and rent, or the live and flip, where you live in a property instead of renting it out to other people for them to live in, and you fix it up and then you resell it, or you live in it and you get roommates so that they can pay off your mortgage while you're living in the property too. Or you buy like duplexes and you live in one side and you rent out the other side so that that person's rent is helping to pay off the duplex and help pay some of your bills so that it cuts down your cost of living. So there's some house hacking strategies that get a little more detailed, but the three basic ones are wholesaling, rentals, and fix and flips. Then you need to set your criteria. So this is going to be based on your financial situation, how expensive of homes can you afford to buy? What are the priced homes in the markets that you're trying to buy? Are they the $30,000 to $50,000 homes? Or are you trying to go after $150,000 to $200,000 homes? Everybody's market's going to be different, so you've got to figure out what price range you're targeting. How much you could afford for the rehab budget. Are you trying to go after big, expensive luxury budgets that have all the nice high-end features that's going to run six figures? Or are you trying to go after the cheap low-end budget on the rehab just to get a property ready in rental condition and not necessarily a higher-end flip? You're just trying to get it ready for that tenant, so you're not going to spend a whole lot of money. So have your criteria, what types of properties, how many bedrooms, bathrooms, approximate square footage, does it have a basement, a garage, a big backyard, what areas, what neighborhoods. All this can go into your criteria. Once you've got your criteria list, you're going to give it to a real estate agent for them to try to help find you properties while you're also self-researching on your own online. But in the meantime, you can give it to a real estate agent. They can help you out. Then you need a marketing plan. This will be the lifeblood of your business. So this is how you're going to generate your leads, which leads in real estate investing is just potential sellers who are going to sell you their property. So the more sellers leads you generate, the more properties you'll have to pick from, and you'll be able to get a better deal. Right now, low inventory is hitting the markets across the United States, so it's getting harder and harder to find good deals. Prices are going up, so people are having to pay more and more for properties every year, and it's no longer that you have lots and lots of cheap, low price deals to pick from as investment properties. So it's getting back to that point where you've really got to do some research, find some off-market deals that not everybody's finding so that you're getting away from the competition. So this is all part of the marketing plan, driving around, looking at vacant homes and then mailing to the property owner. You've got the MLS that everybody pretty much uses, so that's dealing with real estate agent. They can hook you up on the MLS. You can search online. A lot of people list their home for sale by owner, so it won't come through the MLS. But if you're looking on Zillow, Realtor.com, Homes.com, these different places that people will list their home for sale by owner, you can find it there. You can find it on Craigslist. You've got direct mail where you send out letters to people. So you've got different ways you can market to try to come up with seller leads and try to start making some offers. You also need to know how you're going to finance your deals. So this would be the next section in your business plan. So financing, you've got, traditional bank loans that they can supply most of the funding. You just put down a small down payment. And then you've got private loans where people loan you money themselves instead of banks. So if your credit score sucks or you don't have work history to be able to get a loan from the bank, you can go to private individuals like friends, family, or there's even some lending institutions out there that work with, people that have bad credit scores. So that could be a worst case scenario, but they're probably going to charge you a higher interest rate. And sometimes their interest rates are ridiculous. They've got hard money lenders who will lend money for a short period of time if you're doing a flip. So they might lend you for 6 months or a year, and they're going to charge a high interest rate again, like 10 to 15% interest. So if you only use that loan, though, for 3 or 6 months, you're not going to pay that full 10 or 15% since that's an annual rate that you'd pay if you had the loan for a whole year. So sometimes that can be a good route. You can also do equity deals where you partner up with people, they put up the money, and you give them a big percentage of the equity in the deal, and then you put up all the work and the management of it. So then you're like, the other partner that gets equity called sweat equity, and they're more of a passive partner. They just put up the funding, and then they let you make all the decisions and manage the whole project. So lots of different ways to do financing. We'll get into some creative ways in a future video coming up. Then you need to talk about how you're going to do your deals. So you need to have like a process chart or a flow chart of the step-by-step actions that you take throughout a deal so that you understand how it works. So I kind of made a video on this the other day that you could check back. It's called 7 Simple Steps to Buying Your First Investment Property. So that's kind of a similar structure. It gave you kind of a flow chart process of what you do to find a property and how to actually go ahead and buy it. So for example, you got to think about where you're going to look for properties. Then you got to set up a search. Then you got to start watching for those homes to come on the market. Once they come on the market, you got to be ready to set up a showing. So you got to have a real estate agent picked out. From there, you could set up the showing. You can go see the property with your real estate agent. Then you can let your real estate agent submit an offer for you. So you need to be, used to looking over purchase contracts. Obviously, the first one, they're going to have to walk you through it. But after you look through the purchase contract a few times, you'll know all the different clauses in it, and you'll be able to tell the realtor what to fill in the different clauses. From there, they'll submit that purchase contract. Then you're going to wait for the seller to get it. They'll have a deadline. They'll respond, whether they accept your offer, whether they counter. If they counter with a new offer, then you've got to decide whether you want to accept, reject it, or counter that offer. And it goes back and forth before you finally meet head-to-head on good terms, and then you've got a deal. From there, you go through the closing stage. So now you've got to have a step-by-step process of what you're going to do during closing. You've got that 30 to 45 day window, so you need to get inspections done. So you've got to talk to your agent, pick out all the inspections that you want scheduled. Then you've got to wait for the title to get checked by the title company to find out if there's any defects. You also need to get contractors in there to figure out what kind of stuff needs repaired. Get those contractors lined up and ready to get scheduled so that once you take over the property, they can get in there and start doing work. And then from there, you need to know what you're going to do with the property. Are you going to flip it, put it back on the market for sale? Or are you going to hold on to it, rent it out, have a property manager take care of it? Or are you going to wholesale it to another investor? You've got to have this whole plan of action laid out so that you're ready to go and things can go smoothly and in a good, quick, timely fashion so that you're not wasting time, because time is money, especially in real estate. So that goes along with teams and systems. So we just talked about kind of setting up that system, that flow chart of how you want things to go. And you also need to get all your team members in order. So you need to call around to different real estate attorneys in your market, find one that charges at a reasonable rate that can work with you. He could set up your legal entity. He could handle any contracts you need drawn. So if you need to draw up a lease for your tenants, he can create that lease for you, or he can modify an existing lease you might have that you found online so that you've got, different legal documents for your business. Then you need to find an accountant who can handle doing all the depreciation and tax write-offs that rental properties provide. A lot of rich people like real estate investing due to the tax benefits. So find a good accountant who understands all the tax incentives of real estate investing, and he can help you out at the end of the year when you turn in your books from your rental properties or from your fix and flip business. And then you need a real estate agent. I would talk to several, interview several, find the one that you think understands investing the most, who's got experience working with investors, because they're going to be more friendly since you're going to be looking at lots of different properties before you buy one. They're going to be able to help you analyze different things on the property. Whereas a different agent who doesn't work with investors, they might kind of give you some kind of attitude, when you're trying to ask them different questions about the property. You're going to find different agents have different personalities and different interests. Some like working with high-end luxury homeowners, some like working with investors, some don't like working with investors. So you need to interview them, find one that works well. Then you need to find all the different contractors if you're going to sub-work out yourself, or you could find a general contractor who can come in with you, look at the properties, kind of bid out what they think stuff's going to cost, and then they can get to work scheduling all the subcontractors to do the work on the property. You also need an exit strategy and backup plan clause. So if you decide to flip a home, but the market changes or you go over budget, you got to have that backup plan. So you need to know how much the property could rent for, and have that backup plan as far as getting that property rented out instead of flipping it to try to recoup some of your investment before you can eventually sell it down the road to make a profit. So if you're going to be underwater, you might have to rent it out for a little bit to try to recoup some of that money, to make some income off the property, to get yourself back ahead and profitable. And then, just having some other ideas. If things don't go well, you could always lease option it. So that's where you could sell it to your tenant. They'd get 1 year to basically rent it from you. And then at the end of that 1 year of renting, they have the option to purchase. So you'd already predetermine kind of a price. They'll purchase it from a year from now. And that either expires where they don't purchase and they lose, the down payment they made the year before, called the option fee. So there are some more advanced strategies that we'll get into in future videos, but you got to know these backup strategies that you can turn to in case your initial plan falls through. Then you've got to have some flexibility. So you got to learn that you're going to need to make adjustments. Things aren't going to go as planned always. So, this kind of goes with, the backup plan, exit strategies, having a flexible couple different options ready to go to pull out of your pocket in case the market changes, or things kind of change during your time owning that property. So like if rents start falling, then it might be time to get rid of it as a rental property and just sell the property. So you got to be flexible. You thought maybe you were going to own it for 10 years, but now you got to get rid of it after 3 years because the markets are changing. The next section in your business plan is example deals. So this is going to be kind of how you get motivated, get excited by doing some practice deals to kind of see how things go. And then from there, it's going to make it more real to you. So once you do some practice deals, actually buying that first property is going to seem more real because you've already kind of gone through all the mental steps that it takes by doing the practice run through deals. So including these example property analysis in your business plan is not only going to help excite you and motivate you, but it's also good to use it for pitching investors. So you could show them kind of what a typical deal looks like that you're going to be purchasing, how the renovations are going to look. kind of your all-in investment, and the cash flow from the rental property, the profits, the return. So it's good to run through an analysis and actually write it out. So in my business plan, for example, I had a photo of one of my first properties we purchased that when I was trying to raise capital to do more to scale my business. So I showed a photo of the property that I bought. I mean, this is one that I'd already bought, but I did this example deal stuff, practice deals beforehand when I was pitching different investors. But finally, once I had my first deal, I started using that one in my business plan. So it was a photo of it, so find a photo of the practice deal, the practice property on Zillow or wherever. You could save it to your computer, and then you have a photo of the property so that they can look at the photo. From there, I listed out all the features next to the photo. So like how many bedrooms, bathrooms, square footage, the year it's built, the purchase asking price that the seller wants, just different features of the home. And then down below that, I started running the analysis. So from there, I listed out like what the possible rents could be, and then all the different expenses, property taxes, insurance, maintenance, repairs. And so by having this example deal section, you can start showing investors, how they're going to earn a return on their investment to try to get them excited to invest and partner with you. So they'll be able to see a breakdown, how much money you're probably going to need for the purchase, how much money you're going to need funded for the rehab. Then if you guys are flipping it, how much profit split there's going to be, or if it's a rental property, they'll be able to see, once it's rented out, what the cash flow net profit looks like at the end of the year, and then they'll be able to figure out their return on investment. So it's going to help them get a better picture of what your business plan looks like, what kind of deals you're targeting, and how they're going to be able to help you buy those deals by giving you some money, some financing. So that's another example section that you need. Then we've got the personal financials. So lastly, this is, your net worth, your income sources, your debts, liabilities, kind of just an overall picture of how you stand financially so that you can try to figure out your plan for real estate investing based on your current finances. So if you've got lots of cash sitting in the bank, then you might be ready to go to buy your first deal all cash. If you're low on cash, then you're probably going to need to put a down payment and take out bank financing. So that's going to then impact, your monthly return on investment, because you're going to have to pay off your mortgage. You're going to be paying interest, and that's going to reduce the amount of cash flow you're getting from your deals. Where if you buy it all cash, you get to collect, all that rental income and not have to worry about making a mortgage payment. You're also going to know whether or not you have any money at all. So if you're going to need to partner with people who have money, like in my case, I started out without really any money to contribute. So I had to partner with people who had the money, and I had to contribute, knowledge, expertise, management, other areas called sweat equity to the deal. You're also going to be able to figure out kind of your goals down the road by looking at your finances right now. If you're trying to get a loan, what's your credit score? How much loan could you qualify for based on your current income to debt ratio? Because the more debt you have already under your name, like student loans, credit card debt, an existing mortgage or two mortgages, that's going to impact your ability to go out and get financing for future real estate investing deals you do. So you can kind of model things out in an Excel sheet where you could see, how much money you're going to make in year one from your property, how quickly you'll start accumulating money to go buy property number two, how much income, you're going to need to make in your business to be able to start qualifying for bigger and bigger loans in order to start scaling and buying more expensive properties like apartment buildings. So there's lots of different things you can do with the information, looking at what your current financial situation is, how much net worth you have, like how many assets you have, how many liabilities you have, how much cash you have. Looking at all these different things will help give you a clearer picture of how to structure your business based off your finances. So that pretty much wraps it up. These are the basic ingredients of your real estate investing business plan that's going to help guide you, be that roadmap, keep you motivated and on task. And if you want to download my net worth analysis worksheet, you can do so here on this blog post. Again, I'm going to link to it below in the video, or you can see the URL here, under30wealth.com, create-business-plan-real estate investing. So you can come here to this URL, and here it is right here. You can click this to download. It's a net worth sheet that's going to have you put in all your different assets, your liabilities, your income, your monthly expenses. So you're kind of going to get a cash flow picture of how much money you're currently making, how much money you're spending each month. So that's going to tell you how much you're saving away into your savings account that you can contribute towards buying properties. Then you're going to get a picture of your net worth as well, how many assets you own, all the different real estate, stocks, bonds, things you own that make money, and then all your liabilities. These are all your debts. And once you subtract your liabilities from your debts, you can figure out what your current net worth is. So to be considered a millionaire, you typically have to have a net worth above $1 million, meaning you've got more assets than liabilities. The difference between the two is $1 million. So like right now at age 22, I had built a net worth above $300,000. So I'm on my way to becoming a millionaire, hopefully in my 20s before I hit age 30. And a lot of that's credited to buying real estate investment properties. So every month I track my net worth. I add up all the money in my bank accounts, investment accounts, real estate investments, and then I subtract out my debts, which I have very little debt. So it ends up working out to be a pretty high net worth for my age. But that's what you should do. You should track your net worth every month, or at least every 3, 6, 9 months, every quarter of the year. That way you can see how things are changing. Plus it helps motivate you and pushes you to, keep working hard to build your net worth, because every month that you see it going up, it's more motivation to work hard that month, to control your spending, to try to keep growing your savings and your net worth. So go ahead and check this article out, and you've got the net worth analysis worksheet here. And then at the end, we've got some other resources. So we've got more blog articles you could read. We've got some free resources. You can grab some cheat sheets. You could check out more videos on our YouTube channel. And we've got our real estate investing course called Launch. So you can also check that out as well. And then we've got this sidebar here, the 5 strategies you can use to find your investment property. So here's another free resource you can grab. So lots of resources on the blog. And if you do me a favor, click the share buttons below at the end of the article if you found it helpful. That would be greatly appreciated. So thank you for watching today's video. Be sure to hit that thumbs up, subscribe if you're not subscribed, and turn on notifications. We upload every week. Lots of videos, so you don't want to miss our latest uploads each week. Take care.